A Dubai foundation can own assets, but the council controls how decisions are made. If the council role is unclear, banking, asset transfers, succession and governance can become difficult in practice. My name is Shiraz Wahid and I'm the co-founder at Lipitus Wealth. And in this video, I'm going to explain the role of the council members in a Dubai foundation, how they operate within the DIFC and ADGM framework, how control is exercised, and how to structure the council correctly so the foundation functions as you, the founder, has intended. Now, let us start with understanding what council actually is. Now, when you set up a foundation in DIFC or ADGM, the council is the governing body. It performs similar function to board of directors in a company. Within a foundation structure, the focus is stewardship and controlled decision making rather than day-to-day commercial management. The foundation itself is a separate legal entity. It owns the assets in its own name. The council is responsible for managing those assets and making decisions according to the foundation's charter and bylaws. This means that once assets are transferred into the foundation, they are no longer owned personally. Control shifts to the council, which must act within defined rules. This is where many structures either work properly or start to weaken. When the council is properly structured, decisions are clear, authority is recognized, and governance is consistent. Without this, the foundation may exist legally but operate inefficiently in practice. From here, it becomes important to understand what council members actually do on a day-to-day and strategic basis. Council members are responsible for managing the foundation's assets and ensuring that decisions align with its purpose. This includes overseeing investment portfolios, holding shares in companies, managing property, and interacting with banks or financial institutions. In practical terms, this means opening and operating bank accounts, approving transactions, signing agreements, and ensuring compliance with the regulatory requirements in DIFC or ADGM. They also ensure that distribution, if allowed, are made according to the rules set out in the foundation documents. This could involve supporting beneficiaries, funding specific obligations, or maintaining assets for long-term succession planning. At the same time, council members are expected to act in good faith and in the best interest of the foundation. This role carries legal responsibilities and should be treated as an active governance position. For international families, this becomes particularly relevant because assets may sit across multiple jurisdictions. The council acts as the central decision-making layer that coordinates those assets under one governance framework. Once this responsibility is understood, the next layer is how control is actually structured within the council itself. Control within a foundation can be shared across the council or concentrated in specific ways if documents allows. In most cases, the council consists of at least 2 members and decisions are made collectively. This creates a balance. No single person can act unilaterally unless authorized. At the same time, the structure can be designed to reflect your level of involvement. For example, you as a founder may remain as a council member during your lifetime, allowing you to participate in decisions. Alternatively, you may step back and appoint professional or independent members to manage the structure. The key point is that governance documents define control. Informal arrangements should not be relied on. Voting rights, decision thresholds, and authority levels are all documented. This becomes particularly important when dealing with banks and counterparties. Banks and counterparties usually look for formal governance documents instead of verbal instructions. The council provides that formal layer. As structures become more complex, role of guardian often interacts closely with the council as well. In many Dubai foundations, especially in DIFC or ADGM, a guardian or protector is introduced. This role is separate from the council and acts as an oversight mechanism. The council manages the foundation, the guardian supervises certain decisions depending on how the structure is designed. For example, the guardian may need to approve major transactions, changes to beneficiaries, or amendments to the foundation's governing document. This creates an additional layer of control. For high net worth families, this separation can be useful. It allows governance to continue even if council members change, while ensuring that key decisions are not taken without oversight. At the same time, it avoids concentrating too much power in one place. The structure becomes more balanced and resilient over time. This interaction between roles in what differentiates a properly structured foundation from a basic holding arrangement. From here, the next consideration is how council members are selected. When choosing council members, trust matters, but it should be supported by capability, jurisdictional understanding, and long-term continuity. In many cases, founders appoint a mix of individuals. This may include family members, trusted advisors, and in some cases, professional corporate service providers. Family members bring alignment with long-term objectives, while advisors bring the technical knowledge. Professional members bring continuity and regulatory familiarity with DIFC and ADGM. The structure should reflect the complexity of your assets. If assets are held across multiple jurisdictions, having council members who understand cross-border coordination becomes important. It is also important to consider succession at the council level. Council members may change over time. The structure should allow for smooth replacement without disrupting governance. This is often addressed within the bylaws, where appointment and removal mechanisms are clearly defined. Once the council is formed, the focus shifts to how decisions are actually made in practice. In a well-structured foundation, decisions are documented and recorded. This may involve formal resolutions, minutes of the meetings, or written approvals depending on the nature of the action. For routine matters, decisions may be straightforward. For more significant actions, such as asset transfers or major investments, the process is usually more structured. Good documentation keeps the decision process clear, especially when dealing with the banks, regulators, or legal counterparties. It also creates continuity. If council members change, the decision-making history remains clear and accessible. For international families, this becomes particularly important. Assets may be held in different countries, but governance remains centralized within the foundation. At this point, it is important to understand how DIFC and ADGM compares in this context. Both DIFC and ADGM operates as regulated financial centers with clearly defined legal frameworks. Foundation in both jurisdictions follow similar principles, but there are slight differences in approach and flexibility. DIFC foundations are often used for international holding structures, family wealth planning, and integration with financial services within Dubai. The council operates within a well-established legal environment that is widely recognized by global banks. ADGM foundations offer a similar structure but are often seen as more flexible in certain governance arrangements. They are frequently used in more customized succession planning structures or where additional layering is required. In both cases, the role of the council remains central. It is the operational engine of the foundation. Jurisdiction provides the legal framework, but the effectiveness of the structure depends on how the council is designed and how it operates. As structure becomes more advanced, the council also plays a role in coordinating with other entities. In many cases, a foundation operates alongside other entities. It may sit above SPVs, hold shares in operating companies, or interact with trusts in other jurisdictions. The council is responsible for managing these relationships. It may act as shareholders of underlying companies, oversee investment decisions, or coordinate with trustees when a trust is part of the structure. This creates a centralized governance layer. Instead of managing each asset individually, decisions are made at the foundation level. For cross-border families, this simplifies control. It also improves clarity when dealing with banks and regulators. At the same time, it reinforces separation between personal ownership and structured ownership, which is often a key objective in succession and asset protection planning. Ultimately, the effectiveness of this coordination depends on how clearly the council role is defined and executed. As you bring all this together, the council becomes core mechanism through which the foundation operates, rather than a basic administrative requirement. So if you are setting up a DIFC or ADGM foundation and want our help in structuring the council, guardian role, and foundation documents correctly, you can request a personalized asset protection plan by clicking the link in the description below. That's it for today, and I will see you in the next video.